Let's go ahead then and take the next step, which is, now that I know from that triage process, again, what is a triage? Triage is looking at the time frames of the pair that I will trade. And again, for me, it's the daily, 240, 60, 30, 15, and 5. Now the 5 is kind of a little bit of its own world because I have a very specific strategy that I utilize on the 5, again called the between the greens. So that means the 15, 30 are my shorter term intraday time frames, and then I get to slightly longer term, to 60 and the 240, where now I'm starting to flirt with that expectation, that necessity for longer term organization of sentiment and momentum. I don't want to necessarily put myself in that position when there is a lack of direction on the daily. So let's jump over to the daily for a moment, because even though I'm not necessarily interested in trading this time frame, there is a lot of importance that I place on this time frame based upon what I call directional bias. So yes, I was talking about a 15 minute or 30 minutes. So what does the daily have to do with this? Well, the daily in many ways is going to dictate whether I even consider a 15, 30, 60, 240. It's going to determine whether I consider those time frames. So directional bias. The angle of the wave, and therefore the market phase that we see on the daily time frame, is going to help me dictate which time frames I'm even going to consider for an entry. So what I want to do, and let's clean this up for a moment. I have the power stats running here, but let's clean that up. So just momentarily, I'm going to take that power stats off here so you can see the price action. If you're looking at this daily time frame of the dollar Swissy, I think it's abundantly clear by the angle of the wave and the grab candles that we were, past tense, in an uptrend. We did see a lot of bullishness here, a lot of organization of sentiment and momentum pushing us higher. But most recently, not only has the 12 to 2 angle of the wave flattened out, but now I'm looking at some red grab candles here, some blue. I got the red indicating bearishness. I got the blue indicating a more neutral type of market sentiment. And yes, while I do have a little bit more green, it's within the context of, I think, what is a more sideways market phase. With that in mind, I would step back and say that the daily time frame, and therefore the overall psychology of the dollar Swissy, is no longer bullish. It's really not bearish either. It's neutral. When I don't have an overall bullish or bearish trend on the daily time frame, again, if there is not an overall bullish or bearish trend, so either 12 to 2 or 4 to 6, what I would prefer to do then is focus only on short-term time frames, which brings me right back to the 5, which brings me right back to the 15 or the 30. I will make sometimes exceptions with the 60-minute time frame, but I'd rather focus on my short-term time frames because, again, there is no overall bullish or bearishness on the daily, which means that expecting the bulls to carry prices higher for a longer period of time is something that I should not put myself in a position to rely on. So I'll focus on the short term. So that process of triage, getting to the point where I'm going to focus on this 30, is assisted by what I see in terms of a market phase on the daily. So it's all the more reason for me to focus short term. And again, it's also justified because I see the 12 to 2 o'clock angle. I see the respect for the 34 EMA wave, the 34 period exponential moving average on the high, and the 20 period simple are all creating that zone which we have corrected into once already. It's acted as support, and therefore as long as the momentum and the trend are carrying us higher, I can look for opportunities to buy into those pullbacks to this very definable area that I feel support will be waiting at.